All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin. All right, let's jump into this. So, yesterday, right after I made the video, or right before I made the video, Bitcoin had pumped to our close to our resistance, but we actually front ran our golden pocket and we front ran our point of control, our naked daily point of control, our naked weekly point of control, and we were seeing that small grind down. And what I was speculating is that we could make one more high into this, actually touch the resistance and see a rejection from there. Well, after the video ended, we did make this pump up. When we came up into this level, it was about 9 o'clock in the nighttime, 9 p.m. my time, and we were coming up here pretty aggressively. We were not seeing any local bearish divs. We were not seeing any CVD absorption at all or bearish CVD, and our money flow looks strong. So actually, I did post in the Discord. This was at 8:47 p.m. my time last night. I said no real bear divs and money flow looks strong on the low time frame. I'm not shorting yet until I see a sign of weakness. So here's the thing, you guys. We need to understand this. Just because it's a level of resistance on the chart doesn't mean you should just set limit orders there and hope for it to play out. You want to wait for your confirmations to enter the trade. And I've talked about this many, many times. What do we look for confirmations? For me, I look for bearish divs on market cipher B. I also look at CBD to see if there's any bullish or bearish absorption. Also, money flow. We look at money flow to see if money flow is decreasing. Well, if we zoom in here, let's go on to like the 5-minute chart and let's look at this last night when we were pumping into this. We were pumping into this area here. We had finally hit our point of control. We had finally hit this area and we kind of wicked past it here, but we were not seeing at the time that we actually hit into it, we were not seeing any bear divs yet, and our money flow was still increasing all through here. Now, we did end up forming bear divs later on in the nighttime from here to from this high to this high, but I was already asleep by then. And you see, we started seeing some local bear divs here, and we only just got a back test of the VWAP here. But when we came up and actually touched our point of control and touched into our golden pocket, we were not seeing confirmation to enter the trade. And that's why I did say I'm not looking to short until I see a sign of weakness. Because there was the possibility of just pumping up past it and flipping it to support, which is exactly what we kind of did. We pumped up past it, flipped it to support. And one of the things, you guys, anytime you front run a level this closely, I mean, like, look how close that was to hitting it. Anytime you front run a level like this and then you get a small retrace, there is a higher probability the next time that you just bust through it. So that was a concern that I was having. I think I mentioned that in yesterday's video. I'll have to go back and check that out to see if I did. If I didn't, I was looking for the swing failure pattern into actually touch the level for a short, but we did not get first of all, the swing failure pattern didn't happen. If you look here, we just pumped straight through it and kept pumping. And not only did we not get the swing failure pattern, but we did not get a rejection from this POC. So no confirmation to enter the trade, no trade entered. And then we just waited. Now we were pumping here for a bit, and then I went to bed. I said, okay, looks like on low time frames we're trying to flip this to support, maybe to continue up to our value area high, which was our second box of resistance. Remember, over the past few days, 3 or 4 days, I gave 2 major resistance levels to watch. And the 2 major resistance levels that I gave to watch were our 786 from the all-time high, 786 value area high. Well, first and foremost was our golden pocket and point of control at 105 here with our naked daily point of control and our naked weekly point of control. Let me get rid of this real quick. And then our second area that I was looking to short was this area here, which was our 786 value area high. So this area that we just hit into here. And so that we did not reject from our first major short level, but we did get a rejection so far, a rejection from our second major resistance level that I had. And that level there, what is concerning about this as well, we did front run the 786 again, you guys. And so and with us trying to range here, so let me get rid of this now. With us trying to range above the point of control all day long, we were really trying to flip it to support. You can see here all day long, anytime we'd come down to it, we'd see a bounce. 1 bounce here, 2 bounce here, 3 bounce. And on the 3rd bounce, we did get that last impulse with an increase in volume here. We got that big spike in volume and we hit into our value area high. And now once we hit into our value area high, we did reject from that. We rejected and we came down and we made a low. So let's actually check this out here. We rejected from our value area high, and then we kind of started this slow grind down here. Now, once we made this low, we tested our point of control, and overall we held it. We wicked a little bit past it, but we held it and we started pumping up. And we started pumping up. It was really slow grind today. We were pumping up in this wedgie type formation here, and I did post this in the Discord as well. Why we were making this kind of wedge type structure. It was like this here, and then we were making this sort of wedge that we were forming here. And I talked about this. I said in the Discord, guys, our golden pocket of this local move. So if you do a Fibonacci pull from the low, from the high to the low, just locally throughout the day, our golden pocket was coming in right at the top of that wedge area. And I did talk about we could see a rejection even at the 786 in this really JC pocket zone from the golden pocket to 786. But I said this looks really wedgy. Watch for a rejection and a breakdown. And that's exactly what we got. Now, what that tells me is that this was maybe a corrective, you know, like we could be seeing, and I did post about this as well, we could be seeing like an ABC correction here. ABC correction. And then if we do hold our ABC correction after that, maybe we can see another impulse to take these highs up into our 786. And we also do have the last level that we have is that naked daily point of control at 107.9. I believe, yeah, 107.9-ish up here. Naked daily point of control, 107.866. If we break that and we break our 786, we're for sure going to new all-time highs, which I know that sounds, of course we are because it's pretty much there. But we still do need to watch these naked levels, especially naked POCs up here. And we could also, now that we front ran that 786 barely, we could bust straight through that 786. So watch that. If we're coming up to that 786, so like if we do a swing failure pattern of this high that we made earlier today into that macro 786, you want to go onto your lower time frames. And if you guys don't have Market Cipher B, you can use the RSI. RSI will also show you divergences. So it's called the Relative Strength Index. You can put it on your chart. To me, it's not as good as the momentum waves here, but you can look also for RSI divergences as well. And so like, for instance, you know, up in here, we were making higher highs through here, through this to this here, lower highs in the momentum waves, lower highs in the RSI, lower highs on these purple peaks here. So the RSI can also be used to find bullish and bearish divergences as well. And so you want to be zooming in on lower time frames and looking for these divergences to happen. And then also there is a money flow indicator too. If you don't have Market Cipher, there also is a money flow index indicator where you can kind of look at money flow. Overall, you want to see money flow as we're hitting up into that level. On lower time frames, money flow should be topping out and starting to roll over to the downside. But other than that, you guys, really, so these resistances above us now, just right now, right at the daily close here, you can see right before the daily close, we actually finally lost this point of control and we saw a bit of a move to the downside here. Now, as we speak, we are trying to back test this point of control now that we're losing it for the first time today, really, multiple candles, multiple 15-minute candles under it. We need to watch for a bearish back test of this because we're coming up to it right now. So if we come up here, back test this and reject, then we can definitely see much lower targets to look for. And if we reject, let's look at a couple support levels that we could look at here. So let's go zoom out here. Let me get rid of this volume for a second. Clean up this chart. All right. And let me get rid of this. And what I'm going to do, so I did end up pulling this range now that from this January 17th to present day, I was looking at it as a smaller 9-day range. Nope, not that. So I was looking at it like right before that dump on Sunday, and I was looking at this range here. But now that we've kind of reestablished price action within it, we could also see this area down here as a deviation from this range, and we could pull the whole thing as one range. But I also do like keeping this separate range on the chart because if we look at a couple things here, You can see the value area low we just rejected from the value area high. Anytime you come back and reestablish price action within the range, you can see we got back within the range, back tested that value area high, worked our way up to the point of control, flipped the point of control to support on early lower time frames like earlier today, and then we pumped to the value area high. So we can play the range. Anytime you flip the flip the value area low, you'll pump to the POC. Anytime you flip the POC, you're likely to pump to the value area high. Now we are rejecting from the value area high. If we lose the POC, which we're back testing as we speak, then we can expect a drop to the value area low. Now our value area low also aligns with our higher time frame range from November 11th to present day value area high, the value area high of that range. So now that we're breaking above that value area high, we really haven't had a high time frame back test of that value area high to see if we want to continue higher. So what we could be seeing is a drop to this value area high to see a back test of that value area high. If it holds, we can look for higher. Maybe if that holds on higher time frame back test, gosh, I'd be looking at all-time highs, that 112 to 113K pitchfork midline. There's a couple other couple pitchforks up there. So, and pitchfork levels, I should say. All right, so now if we do drop past this value area low, there's a couple things we could be looking at here. Let's do, first and foremost, let's do a Fibonacci pull. So what I looked at this is a, like an ABC correction here, ABC here, and then this is like a 5-wave impulse to the upside. So our wave 1, 2, 3, 4, 5. I drew that really crappy, but you get the idea. 1, 2, third wave impulse, 4, 5 up here. Now we could be starting our bigger like ABC correction to the downside. And if we are going to see a bigger ABC correction to the downside right now, there's a couple things we could look at. We can do a Fibonacci pull from the last major low of the start of that impulse to our highs. And you can see our golden pocket is coming in with an anchored VWAP. Now, this anchored VWAP is a new anchored VWAP that I just pulled today. It's based off of this low here. Anytime we put in like a major pivot low like this, you can pull an anchored VWAP from it and look for it to generally hold as support. You can see here we had one quick flush past it, but overall it held as support. You can see the next candle wicked. Here on the FOMC meeting dump, we pretty much dumped to it, held it as support. Now our local golden pocket from this low to the high is at our anchored VWAP. So 1024 to 1026, because this anchored VWAP is slowly going to rise as time passes. And so this would be our first, well, first off, our value area high is our first level of support. Anchored VWAP, point of control down. Here's another level interested in. And then that 786 in confluence with the bottom of the pitchfork band could be a good level as well. I do like this Fibonacci pull a little bit better though. So if we go from the lows of the move to the highs that we just made today, you can see a couple things here, guys. We have our golden pocket right at the liquidity. So in that flash crash dump from the FOMC meeting yesterday, we had a lot of buy pressure in through this wick. You can see with how bullish this candle was. So we had a lot of buy pressure. So a lot of people had entered in here. We have a lot of liquidity resting down here below 101.375. And so what we could do is we could make a correction down into this bigger golden pocket at 101.8 to 101.9, pretty much 101.865 to 101.785. And we would see the SFP of this liquidity that was resting down here, the liquidity grab into the golden pocket. Anytime we see a liquidity grab into a golden pocket, that's a great setup for me. I like to take those if it plays out. So of course you'd want to hit the golden pocket, see a bounce in like a 15-minute close at or above the swing failure pattern level, the body of the candle, and then you could look for a push up. If we do lose this area here, really there's not much more down below us. We do have to remember we did front run this bigger golden pocket here, and then it's also aligning with the bottom of the pitchfork band, so we could retrace this entire move and dump and make new lows again. Now, I had been also talking yesterday in the video about this ascending channel that we're in here, and you could see I've highlighted this low here in our bigger golden pocket. The very first support we could look at if we do a Fibonacci pull from the FOMC dump lows to our highs, Now it is getting kind of steep for this, so that golden pocket's no longer in really good alignment with this here. When we were up here, it was, if we had a quick dump, it would have been, but we have not had a quick dump. So if we break this channel, though, this channel has been our trend the entire time. So if we break this channel to the downside, and what we could see, if we are going to see an ABC correction here, we could see like an A wave here to break the channel. A B wave is our bearish back test of the channel, and then a C wave down to that golden pocket in the liquidity grab of these lows here. So now, in order to do that, we would have to lose our big range value area high, this value area high that I'm talking about here. And if we lose this and start to confirm daily candles below this after kind of this, we could almost call this on a daily level like a failed auction. If we zoom out onto higher time frames, it's just looking really weak above this level. I mean, doesn't look too weak actually, but this is the way we're chopping up in the like this wedge type structure or channel type structure. Just looks like we're begging to sweep the liquidity. We have three major liquidity spots here that we could sweep, and you know, anytime you break a channel like that, you usually come sweep the second pivot of the channel. So that's these lows down here, and that would be a nice sweep as well. So let's actually look at our golden pocket again. Now, in order to sweep these lows here, we would probably have to come into our 786 down here. Let's zoom out and look to see if we have any new daily levels. So we do have a new daily level that is here. Let's get that on the chart. This daily level. And look at that daily level is also right below our swing failure pattern. So let me mark it out on this chart because this is looking really nice actually. Starting to align as a really nice level of support. So let's go mark that daily out, and then now we can zoom back in onto the 1 hour chart. And let's check this out, you guys. Let's clean this up first of all. Get rid of that. Okay, so this swing failure pattern into our daily level, which is right below it, and our golden pocket right below it. So maybe we see a quick wick into our 618 of our golden pocket and close the candle at or above the swing failure. That our daily's right around there. So this general box of support down here is going to be looking good. I would probably do it at like this area here, or not that, to the 618. So here would be a nice level of support to be looking at here in this general area. That is if we lose our first support, which is really our value area high here. I am going to zoom in real quick, and we're going to look at this POC backtest because I'm interested to see what this is doing right now. I mean, we're trying. We're trying. If we get back above this, because I also see like a smaller time frame descending channel through here that we're kind of trading in right now. And you could see the midlines respected, bouncing from the midline, bouncing from the midline here. So if we do start to break this level to the upside, we could probably look for the highs to be taken. As far as local retraces go, now we could do a Fibonacci pull from our high to our low. And okay, so this is also now our 786 area. Let's look at the 886. Okay, so 886 is around the value area high. There is a possibility we can reject from the 886 again and then make another low. But eventually, if we do come up and hit the 886, eventually we are going to come for these highs. Anytime you touch an 886, it's highly probable to come take the highs that the 886 was created from, or the lows that the 886 was created from. So that is an area. First level of business is to reclaim this point of control now. If we do not, we could continue to slow grind down in this channel here, or we could start to see a quick flush down. One of the things we could look at is this being the start of an impulse to the downside. It'd be a double 1-2 at this point. So a 1-2, 1-2, and then we want to see a big crash down, or maybe even a triple 1-2. I don't like that though. Unless we reject here and then we see a massive flush to the downside, then that would make sense. All right, so other than that, you guys, we just kind of, we can play a couple things here, a couple ranges now, lower time frame. So we're on the 12-minute chart. We could play this intraday range that's kind of forming from this high. The time that we busted above this point of control, we were trying to flip it to support all day, so we can play this range here. And you can see this range is, let me hide this one to minimize confusion. All right, so rejected from the point of control of the range. We're losing the value area low, but we reclaimed it. You can even see we back tested it here, very low time frame, and now we're trying to come up, but we are starting to reject from that bigger point of control, which is far more important. So that's going to be what we really want to be watching, is for the rejection that we could possibly see right now. Yes. Another thing that we saw earlier today, you guys. So when we were ranging, let me get that point of control back here. Did I just hide that or did I delete it? All right. Let me zoom back out and let me remake this range real quick here. And I want to show you guys, we were making a wedge type structure earlier today. So we had our first rejection from the value area high, which it was up a little bit higher. Now it's starting to drop a little bit with this decline here, but the value area high was right up here. We just wicked into it pretty much. And we saw this initial drop to test our point of control. We bounced from our point of control, and then in this bounce here, we saw a 3-wave move to the upside, which is a corrective move, a zigzag corrective move to the upside. But we were making that corrective move, and I talked about this in the Discord. I even posted this. We were making this kind of sort of wedge type structure that did not look very good. And I was really looking at this wedge type structure here to break down. If you look at our local golden pocket pull, if we go from the highs here to the lows and we go to our golden pocket, you can see our golden pocket is right where we rejected from. And it was also near the top of this wedge here. So I posted about that in the Discord as well. So I did post the no real bear divs. Money flow looks strong. That was when we were coming up into that actual point of control. And then let me zoom in here. Let's go back to today's stuff. And earlier today, yeah, so I was talking about this wedge. I said 3-minute looks pretty wedgy. We should watch for rejection, even if it comes to that 786. But we did end up rejecting from that golden pocket. And then you see we started to dump out of the wedge. It looked awfully like a 3-wave correction. So we did see that 3-wave correction here, ABC correction here. We dump back down, and now we could be starting a bigger dump. If we're trying to back test this point of control now and reclaim it again as support. But if we reject here, we can definitely expect lower. So that's kind of what we saw in Bitcoin today. Now, as far as the liquidity goes, you guys, let's go to the liquidity heat map. And I want to show you something here, because we did make a move up into the value area high and into this liquidity, but you can see that we did not take all the liquidity. We took about 2/3 of the majority of the liquidity. We left some above us, and we even have some up here, 107.2 or so. And so that naked daily point of control, we do have this naked daily point of control. If we did pump up to this, we would sweep all the liquidity that's left. And our 786, now that our 786 has been so close to being hit, but front run, we do need to watch for a pump through it, just like we front run our golden pocket here. And the next time we pumped through it, but our swing failure pattern of the high, just like yesterday, we were looking for a swing failure pattern of the high into our golden pocket. We can now watch for a swing failure pattern of this high into our 786. Just be aware that we could bust straight through it. So if you do not confirm the swing failure pattern, you do not take the trade. Wick into the 786, close the candle body. I would say like a 5 to 15 minute candle body at or below the swing failure level, and then you could see the dump. If you do not confirm a swing failure, you do not take the short. You let it go. You let it play out. So let me do that Fibonacci pull. We'll go from the high to the low here. Let's turn on our 786. All right, so that's what I'm talking about, this 106.9-ish area, which is our 786. Let's go back into our 6-minute chart here. So if we do come up and SFP this high here into our 786, we are going to want to see the wick So, like maybe come up here, hit this, come back down immediately, close the body of the candle at or below this swing failure pattern, and then we could see the dump. If we don't see that, and also as we're pumping up here, making higher highs, higher lows, higher highs, we want to see local bearish divs on the chart. Higher highs on the price action, we'd want to be seeing lower highs on the momentum waves here. Now, confirmations are super key to take with trades. I think I just talked about this. I had to start the video over, but if you do not have market cipher B, you can use other indicators to look for bearish divs. So we do have, like, if you go to the relative, it's called the RSI, the relative strength index. You can use the relative strength index to look for local bear divs as well. You can see, like, when we're coming up into this area here, market cipher. Oh, let me get rid of that. And let me clean this up for you guys so you can see this. So get this more clear. All right. As we were coming up into that golden pocket, we had pumped above the golden pocket, but you can see from this high to this high now, unfortunately, that was right after I went to bed. We did actually finally now confirm the bear divs. Higher highs in the price action, lower highs in the momentum waves. Money flow was still going up though, so I probably wouldn't have shorted just because of the 5-minute divs. But you can also see our RSI here. We have our purple wave. It peaked here, and then we had a lower high here. Higher highs in the price action, lower highs in the momentum wave. So you can also use the RSI to find divergences, bullish and bearish divergences. And you can also use a money flow indicator. There is a money flow indicator out there. It's, to me, it's not near as good as Market Cipher B, but we do have a money flow indicator here as well. So if you do not have Market Cipher B, or you can't afford it or something like that, you can use alternatives here to look for confirmations, because confirmations are super important to enter. They kind of help you whether to know to pull the trigger at a key resistance or support or not. And if you come up to your level, just because it's a level of resistance doesn't mean we have to reject from there. You want to see your confirmation to enter the trade. And yesterday we did not have our confirmation. That's why I posted in the Discord. Money flow looks strong. No bear divs on lower time frames. I'm waiting until I see a sign of weakness. Now, we really didn't see a sign of weakness all day. We're finally starting to see our first sign of weakness by dropping below the point of control, back testing the point of control. And if we start to dump and make a new low, we could maybe expect a bigger rejection to come here. So really, we were trying to flip all day long. We were trying to flip that 105 area to support. You can see came down to its support, came down to its support, came down to its support, support here, multiple times. Now we're finally starting to lose it on the daily the new daily open here. And if we look at our daily candle, technically our daily candle did close below that point of control. If I zoom out and we do a pull here, let's go to this area, January, 17th. You can see our daily candle we have a pretty aggressive wick to the upside, but we closed our daily candle right below that point of control, which is a kind of bearish sign. So we'd want to see us reclaim this point of control relatively quickly in order to sustain this pump up. But this whole pump up to me looked wedgy, and yes, we are making higher highs and higher lows, and until the trend is broken, you got to the trend is your friend until the end. So until the trend rejects us, we have to continue to expect higher highs and higher lows. But this channel that we're seeing here, I mean, to me, it looks like we're begging to come sweep the liquidity levels, at least this liquidity level, into our daily and our golden pocket. That would be really nice to see. So that is a possible support area. Now, this is not our first support area. Our first support area is that bigger value area high, this back test here. And this is also around this pitchfork band. The pitchfork band is rising really quickly. And also, we're getting chopped up a lot through it now. So I'm not paying attention. It's more of like an area for me. And really now the bottom of it's going to be more important to me. So we can watch that area. You can see that if we take the big range from January 17th to present and we make it one range instead of just this 9-day range, you can see that our value area low is coming in around the bottom of that pitchfork band here. And anytime you reject from a value area high and you flip the PLC to resistance after losing it, you can expect a move down to the value area low in most cases, not all cases. and that value area low is aligning with this pitchfork level. But if we did that, once again, we'd be front running our point of our golden pocket, which it seems like we've been doing a lot this last couple weeks. All right, so that's pretty much it for Bitcoin. The liquidations, like I said, we do still have some liquidity above us. Let's go to our Model 3 map and let's look at our Model 3 heat map here. All right. Yeah, and now the majority of the liquidity is below us. So that could act as a magnet to take it below us, to come a little bit lower, to reject from this point of control and continue lower. So that like 104 is where that ends. Let's see, 104. Yeah, it's about the back test of this band here. A little bit higher than that. But we can just watch locally now. Even locally, you could pull a range, just like a more intraday range of just this high price action here, this sideways price action, and you can trade this range here. It looks like we're losing the point of control. No, not the small range point of control, the bigger range point of control. And if we do not hold this value area low that we're right at right now, we can probably see new lows here. So that's kind of what I'm looking at for Bitcoin. Real quick here, because I got to go in just a second. I want to show you guys XRP because XRP has been so nice. And let me go onto the hourly. So XRP, we were looking for, we had pumped from the bottom of our channel. And I talked about the last time I made a video for XRP to look for this first level of resistance being the naked daily point of control at 318. Well, we had like a 10% move. We came up to that naked daily point of control, rejected from it, came down to the midline of our big channel here that we're seeing, bounced from the channel, made a lower high, and then came down to our this new naked daily point of control was created from the 2 days ago off of this high here. So you can see point of control rejected us, bounced from the midline, made a lower high, came down to our naked daily point of control support, hit it, bounced perfectly, and now we're kind of pushing up from that. Now this one we could take off the chart because it's hit, and even this one we could take off the chart now. It's been hit. But we do still, you guys, to me, the major level of resistance is up here. 886, swing failure pattern, naked daily point of control, the top of our channel. So if we come up to 328.5, I'm really going to be looking for a possible rejection here to continue to just chop in this sideways channel for a bit. Descending channel, but it's like kind of, slight descending, I should say. And then, of course, the bottom of our channel, now we could take a Fibonacci from the high to the lows of that move that we made up a couple days ago. Our 786 here is coming in right around the bottom of the channel and right around the bottom of our pitchfork band. So this area of support here. And then, of course, we do have the top of the pitchfork band aligning with our anchored VWAP here. Other than that, you guys, I am going to make another video. I just got to take off real quick. I'll make another video in a couple hours. Hope this helps. Let's see real quick here. Let's look at our CVD to see what we're seeing on CVD, because if we reject from this bearish backtest to the point of control, we can expect to come lower. Yeah, we're open interest has just been decreasing. Wow. A lot of positions closing out here throughout since this high was made. A lot of positions are closing out through all of this. Yeah, I mean, it looks like we obviously saw a lot of longs come in on this last push up, and it looks like some of those longs are getting stopped out now. Here, you can see this decrease in OI means those positions are closing, and they are a short position. So when you get stopped out of the long, it's a short sell, a market sell or a short. So that's kind of what we're seeing here through this little grind down. All right, guys, I hope this helps. I'll make another video later. Have a good night.